Good morning and welcome to another Five with Fitz. I'm Keith Fitz-Gerald. As always, thanks for joining me. Markets are an exciting place right now. Speaking of which, I gotta say, imagine that. The markets came out of the gate green, storming after Palantir's earnings, but quickly flipped red, something I warned you explicitly about via Twitter last night if you happen to see it. You can see the image of my tweet on another part of my channel or the written version of the Five with Fitz. So the question on everybody's mind is, so now what? Well, headlines come and go, but profit potential is always a permanent fixture. So, moral of the story is concentrate on that, the profit potential. Remember, investing in optimism beats cowering in pessimism. Every time, over time, all the time. So here's my playbook today. Number one, Palantir homers earnings. I mean, this just wasn't a small beat. This was astonishing. My exact words yesterday morning were, quote, I wouldn't be surprised in the slightest if Palantir puts in its first billion-dollar quarter. And fortunately, that's exactly what Team Carp put up when Palantir reported Q2 earnings yesterday. I mean, think about this for a second. They achieved a Rule of 40 score of 94%. They grew total customer count by 43% to 849. They logged a 93% U.S. commercial revenue growth rate, raised full year 25 guidance, closed 157 deals worth $1 million or more. And incredibly, many folks are wondering if it's too late to buy. And my answer, if you're one of them, is no way. We are on the cusp of what I call the sixth wave, something that will fundamentally alter the course of human history. Moreover, history suggests that there are 10 to 15 Palantirs out there right now in various stages of maturity. And your job as an investor is to find them. Now, hopefully, you already own at least a few of them. If not, and you'd like to, you may enjoy One Bar Ahead, where I make it a priority to find these kinds of companies long before the rest of the world catches on. By the way, if you're wondering what Palantir actually does, you're not alone. Take a look at the explanation, the quick and dirty explanation that I gave Fox anchor Stuart Varney yesterday morning ahead of opening bell. I think it might help. It's a very intriguing company. Number two, Pfizer, buy or sell. Now, Pfizer posted better than expected Q2 earnings and raised its full year profit forecast thanks to strong sales from both COVID and non-COVID drugs, plus deep cost cuts. Now, EPS, this was important. EPS came in at 78 cents versus 58 cents expected. I mean, that's killer good. Revenue was up 10% year over year to 14.65 billion. COVID vaccines and Paxlovid both crushed estimates. But the company now expects 7.7 billion in cost savings by 2027, and it reaffirmed its 61 billion to 64 billion dollar revenue forecast. Great, right? Yeah, not so fast. The Trump administration is turning up the heat on drug pricing and floating pharma-specific tariffs that could hammer margins as Pfizer tries to get its groove back. Here's a thing to think about, an investing tip really in this department. Just because the storm has passed doesn't mean the sea will calm. And if you're a sailor, you know exactly what I'm talking about. OBAers, by the way, if you haven't already read yesterday's update, please get into your email and take a look at it for the specific take on what to do here as well as why in this situation when you have a moment. Number three today, TSMC, Taiwan Semiconductor breach is a national security alarm. This was intriguing to me, and when I read the headlines this morning, but the world's largest chip maker says it's uncovered, quote, unauthorized activities, translation, somebody robbed you blind, that may have exposed critical IP tied to its cutting-edge 2 nanometer chip development, all right? Like, that's a surprise, right? Think about that for a second. Authorities in Taiwan have apparently arrested 6 people, former and current TSMC staff, suspected of stealing trade secrets tied to the company's next-gen 2 nanometer chip technology, which I might add China desperately wants, and which sits at the bleeding edge of global semiconductor manufacturing. Do not make the mistake of thinking this is just intellectual piracy like many investors will. This is a national security concern and a global situation with ramifications that will span our world today, which is why it is also a correspondingly large investing opportunity. Sovereign AI, a term I coined in 2017, or was certainly among the first to use, is a weapons-grade asset in a global chip war where digital secrets are now worth more than oil. You can bet that Apple, Nvidia, and every other high-performance player that relies on TSMC's manufacturing muscle will be watching this. Probably Tesla too, because it's of extreme interest to them. Now, it's not a mystery why the big boys are developing their own silicon given situations like this. So, moral of the story as an investor is you want to invest accordingly. And if you want a little help sorting out what's what, I'll be here if you need me. Number 4. This pains me, but it's quite literally Intel's teething pains. Intel, one of the proudest brands on the planet, is now a fraction of what it used to be, and I unfortunately don't think it's got very good prospects. But it bet big on a new process, 18A, in an effort to restore and win new manufacturing deals and rebuild the edge that it once enjoyed by producing high-end chips for years, decades in fact. But Reuters is reporting that only a small percentage of the new Panther Lake chips printed via the company's new 18A process are good enough to make it available to customers. Uh-oh. Historically, this is not even remotely close to previous pre-launch ramp-up periods and something that could crater margins for a long time to come. Now, I've avoided Intel, as you know, for a long time, but I'm now thinking putskis, put options, could be a good opportunistic bet that prices decline. All right, number 5, United Health is quite literally bleeding out. Bad pun on words, yeah, I know. But I warned you very specifically to steer clear of United Health Group on April 17th, 2025, saying that what's happening is a ginormous warning flare. Since then, shares have dropped minus 46.42%, and as part of that, I flagged the warning signs when United Health pulled the old guidance, what guidance routine, just before the CEO bailed for personal reasons. Yeah, I'll bet. I got a bridge to sell you too. Let's not forget, UNH missed earnings for the first time since 2008, slashed guidance, blamed unexpected medical costs, mostly tied to Medicare Advantage, and remains under federal investigation for alleged billing fraud. I mean, really, folks, talk about a glaring red Vegas-sized neon sign flashing trouble ahead. I mean, you don't need a lot of imagination here. The markets are tough, often sniffing out trouble long before the headlines confirm it. Now, head companies can put up headlines that show billions of dollars in profits, as UNH has done. But the smoke is getting thicker. Investigations, operational failures, lack of execution, leadership challenges, all of which tells me that the markets are sensing something far more dangerous to your money. Now, call me crazy, but I've learned over the years that you give companies in this sort of situation a wide berth because there's no sense in being stupid with your money, even if management seemingly is. Oh, and I tell you what, if you're a dividend investor, beware, keep your eyes open. Something stinks here, and it isn't a fish. Keith's investing tip in this department: trust is an important and often overlooked stock ownership criteria, at least for me anyway. Re-rating a company like UNH doesn't come easy, so stick to companies without the proverbial baggage. You and your portfolio will be far happier, dare I say it, likely profitable over time for doing so. Today's bottom line, super simple. There will be more profits created in the next 10 years than the last 50 combined. And, not for nothing, an entirely new generation of millionaires who understands this is being printed right now. So, grab your share, or somebody else almost certainly will. You got this, I promise. As always, let's make it a great day. Thanks for joining me, and I will see you again tomorrow.